Coming up in today's video, we're talking about the stock market slide that we're seeing, the rip in gold, Bitcoin bouncing back a little bit, oil jumping, and the dollar index threatening to make new lows. And if you're wondering what's going on, Trump calls for a 50% tariff on European Union starting June 1st, which is right around the corner. In other news, Trump threatens Apple with a 25% tariff if it doesn't build iPhones in America. And rarely have we seen a US president get so involved specifically with a product built by a US public company. And if you stick around in this video, I'll be talking about some of the trades that I'm currently taking and in at this moment. And I'll be covering indices, commodities, and currencies in this video. All I ask is if you enjoy my content, make sure to hit the thumbs up button. Let's go. So tensions between the European Union and the Trump administration seem hot off the press here this morning, with the euro moving higher and looking increasingly likely that it may head back to retest this previous high right around 1.15. And with this re-escalation in terms of trade uncertainties, the US dollar is down again here today, now looking like it is going to test that previous low that we saw a few weeks ago. Just when it looked like trade dynamics were going to just be smooth sailing from here, we've got a little bit of an escalation event happening again. And for context on how important this is, in 2024, total US goods traded with the EU reached an estimated $975 billion. This includes $370 billion in US goods exported to the EU and $600 billion in US goods imported from the EU. This represents a significant trade imbalance, with the US importing more goods from the EU than it exports. Another market making significant moves off of this is, of course, gold, which is driving higher as people are kind of relighting the flames, if you will, when it comes to trade war uncertainty. As I just pointed out, the EU and US are really big trade partners. And I definitely did not have it on my 2025 bingo card that the US and China seem to be having a better negotiation process than the European Union and the United States, at least at this time. At this time, it does look likely that the gold market will retest this previous high around 34.40, and we'll see if it can get a breakout beyond that. But I think really what you would need for a break beyond this high would be some sort of significant escalation in one of the events that geopolitically we're worried about. Like, for example, Ukraine and Russia, the breakdown on, like, for example, if there was a breakdown between the Russian and Ukrainian peace negotiations, or, for example, if China backed out of negotiations with the United States, something big would have to happen in order for a significant breakout. So if you're watching gold, again, as you get up into this area, you're going to need some huge catalyst, in my opinion, to really break out price to the upside. So I do see limited upside for gold unless you get something really new and exciting to the market, and exciting as in not a good thing. The US stock market is lower here off of this. You can see, take a look at the S&P 500 on the daily chart. We're pulling back to this 5,800 level of support. And I actually really like the idea of potentially getting long some indices in this range, and have done so myself. More on that later. The NASDAQ also pulling back. If it does squeeze down here just to this 20,400 to 20,000 level, I'm very interested in some longs if we can get a pullback into that area, looking for a, again, potential retest of the all-time highs sooner rather than later. I am still bullish on indices despite this spooky headline. The put to call ratio also just flared up for the first time, suggesting that people are starting to get really scared again, with a extreme reading to the put demand side, meaning that people are out there buying puts aggressively again. And this has in recent months been a really decent timing indicator to tell us when, okay, if everyone's scared, maybe there's some good risk reward to look for on the long side going against the crowd sentiment. This is specifically for the S&P 500. If we take a look at, for example, the NASDAQ, we can also see that it is elevated in terms of the demand for puts drastically outweighing the demand for calls, which shows crowd sentiment is scared. Be cautious on gold, because the opposite extreme is occurring here, where investors seem to be pigpiling into buying call positions, assuming that the market for gold will keep going higher. And just a heads up, if you are not in our free to join Telegram channel, we're posting extra chart markups, bonus clips from the live streams, and so much more in here. And we are currently offering a free gold VIP membership in our giveaway. To join the giveaway, there's two simple steps. Number one, join the Telegram channel, which is linked in the description down below and in the pinned comment of this video comment section. And number two, enter for a chance to win using this form right here. We'll be announcing a winner next week. And for viewers watching on a TV or who would prefer to use a QR code, you can scan the QR code on the screen right now to join our Telegram channel. Another chart I've been watching is the British pound against the US dollar, which just broke to a multi-year high. I do think that this has potential to continue, and pullbacks into this area, in my view, are opportunities to continue to look for bullish setups. I'll be watching that myself for possible trades in the coming week. And we had some good news out of the UK, specifically on the retail sales front. Check this out. On their month-over-month reading, they came in at 1.2% retail sales growth compared to the forecasted 0.3%. That's a big beat, and the consumer seems to be showing up a little bit more than analysts had expected. This is a strong reading for the British pound. And when we look at the UK economic heat map within the Edge Finder, most of our indicators here are still suggesting British pound bullishness, or GBP. And specifically, you can see the number here from this morning, as well as the recent services PMI, as well as the CPI coming in higher than expected, are three very strong bullish catalysts for the British pound. So I do favor the upside, and we'll be looking for longs. Here's a quick look at our economic surprise meter for all of our major countries. You can see some of the strongest readings currently are the British pound, the New Zealand dollar, the Australian dollar, and everything else is either mixed or negative. Japanese yen getting the lowest score, Swiss franc the second lowest, US dollar third, and Canada is right in the middle. Actually, I'm sorry, I missed this one. Europe actually getting some weak numbers here. Take a look at the euro here. I just pulled up the EU economic heat map. Most of our indicators here are actually getting bearish readings for the EU. Specifically, services and manufacturing PMI numbers coming in soft for the European Union. That was as of yesterday's report. And what I love about having these surprise meters is that I can very quickly, at a glance, keep an eye on all the economic data without pouring through each one in an article. If you don't have access to the Edge Finder and would like to try it for 30 days, there's a link in the description down below to where you can find more information about our trial process. Today's video is sponsored by DNA Funded. If you're looking to get funded this year and feel that your trading is at the point where you are ready to take on more trading capital, it may be worth exploring DNA Funded. They offer subscribers who watch my channel a 20% off discount code with the promo code that you see at the bottom of your screen right now, A1T20. You can trade over 800 different assets with DNA Funded, and they offer payouts in as little as 7 days, and their profit sharing options are up to 90%. So if you're looking to get funded, see if DNA Funded is right for you by using the link in the description down below and using our promo code for 20% off. And so if you stuck around, I wanted to tell you a little bit more about a trade that I took here this morning. Actually happened during the live stream. I saw a pullback on the Russell as the New York session opened up, and I decided I would take a long position. So I bought the Russell, which is an index of small companies in the United States. Now, these are not tiny companies. These are, good sized companies. They're just not your Apples and Amazons. Well, I went long because we had pulled back to a key level that I had been watching at this 2000 level. I think you've got a bit of a round number play here on the Russell and a nice pullback in what has been a nice breakout upward trend move. I do think there's a good chance that the Russell has some catch up to do with the other major indices, and I've really liked the strength of the rebound that we've seen in recent weeks. Not to mention, on the top setups page, the Russell is getting a very bullish reading, which means that after considering the market sentiment, crowd, and institutional, technical readings, seasonality and momentum, and economic data, everything from inflation to jobs data to economic growth metrics, we're getting a +10 score, which is a very solid overall reading, and I like the Russell's price action, so I went long with a stop loss below structure. So we'll see how this goes from here. But full transparency, I did also have a stop out on the Dow Jones trade that I shared with viewers yesterday. So I ended up getting long here and stopped out this morning, but decided I still want to be long indices, but actually chose to get long the Russell instead of rejoining the Dow Jones trade because I like the technicals and the potential upside for the Russell more. On today's episode of the Market Insights podcast, I spoke with Johnny Hart a little bit more about the current situation between Trump and the European Union. And I'll leave the full link to the podcast in the description down below this video if you'd like to listen to the full thing. If you're somebody who is very interested in listening to fundamental analysis podcasts, this is the perfect podcast for you. And like I said, the link is below.
We've got concerns today because of Trump tariffs being back in the headlines. Markets don't like it. Basically, Donald Trump has threatened to impose a 50% tariff on the EU starting from next month, after saying that trade talks with Brussels were going nowhere. He made those comments on his Truth Social platform. And yes, things things go from day to day, don't they? Things can change daily, can't they? But is this just the latest part of the art of the deal, or should markets be really concerned about this?
I was wondering the same thing, Johnny, in terms of like, we've seen this playbook a couple times now, right? Like you would think the market's starting to figure out how this ordeal kind of goes. There's a big, confrontational kind of statement that is made, and then shortly after it's like, actually they want to make a deal, we're going to shake hands on this, so we've seen this playbook a couple times. I mean, if we can see it with China, I imagine we could probably see it with the EU. So when it comes to market reactions here this morning, stocks are lower, as you pointed out. We also see gold making a pretty good move higher here, 1.8% move higher up to 33.50 an ounce. We also see the VIX this morning at one point was up about 20%, has since come down a good bit from there. Stocks are, lower, but at least at the time of recording, moderating a little bit. I wonder if, Johnny, you might be onto something with that thinking, right? The market is like, okay, Trump, we've seen this game a couple times. We know how this works. So I do wonder if maybe that is a little bit at play. That being said, the Japanese yen moving higher here today. Yields were moving lower, have bounced back a little bit. And notably, we see some really interesting moves happening in the British pound against the dollar today, Johnny.
That's right. I mean, the pound is now trading at levels last seen in February 2022. And, the dollar, as you said, has taken a bit of a hit as the news from Trump has only intensified existing market worries about the sustainability of US government debt levels. Also, on that Truth Social post, by the way, Nick, was a threat to Apple that it will be forced to pay 25% tariffs on its iPhones unless it moves all its manufacturing to the United States, which is, bearing in mind that Donald Trump likes meeting up with the big CEOs of the big tech companies. Tim Cook is not going to be very happy about that, is he? He says Donald Trump says he's informed Tim Cook that he expects that their iPhones that will be sold in the USA will be manufactured and built in the USA and not India and not any place else, to quote the president. It takes a long time to make that kind of transition anyway. So I'm not quite sure where it's going with Apple. I feel a little bit more secure about the EU because you just think, well, it's just part, as we said, it's part of the playbook, as you call it, the art of the deal, I call it, where if not 50%, it will go down to 20% or 15% or whatever. But the Apple situation is a bit more difficult to work out how it's going to fan out because it's a structural thing, isn't it? You can't just move massive factories and all your workers and get the right people you want in a matter of days or months. Unlike you can change the tariff number. You can change the tariff number overnight. You can't move a factory to the Midwest just like that.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.